you're all doing amazing today. And yes, happy new week. So in today's video, we're going to discuss a couple of things, and we're going to be starting with the dollar index, and then we're going to jump into the trade that we have running, our current open positions. And after that, we're going to talk about few economic heat map, few fundamentals. And afterwards, we talk about my trade recommendation, and we're going to wrap it up for the day. And then maybe we're going to talk about economic calendar as well. I think we have a few calendar today, so let's kick off with that. But before we continue, please, if this is your first time watching the video, if this is your first time on the channel, don't forget to subscribe. Also, do not forget to like the video if you find it interesting. Okay, it's going to help the channel a lot. Right. So this coming week, we have just a few economic data, right? In the United States on Tuesday, we have core retail sales and retail sales. And then on Wednesday, which is February 11, we have the NFP that was postponed last week, Friday. All right, they're all coming this week on Wednesday. That is hourly earnings. We have non-farm payroll. And then we have the unemployment rate, all of them coming this week. So prepare ahead for them. And on Thursday, in the United Kingdom, we have the monthly GDP, okay, expected to come lower than previous. That's quite interesting. So watch out for that, especially if you are looking into trading pound dollar, pound Aussie, pound card, all anything pound. All right, you might want to look into this. You might want to pay close attention to that data. Okay. And after that, we have the unemployment claim in the United States on Thursday as well. And then Friday, we have the inflationary data in Switzerland. In the United States, we have CPI, core CPI, CPI month to month, and we have the annual CPI, meaning CPI year on year. So those are the data we have coming next week. So prepare yourself accordingly. You all know the basic part of it. If the previous come higher than forecast, if the actual come higher than forecast, it means it means pretty good for the currency. If it comes lower than forecast, that means it is bad for the currency. However, I'm talking about the inflation right now, okay, about the inflation data. So if it comes lower than previous, it's very good for the economy, but bad for the currency. Okay. But if it comes higher than what was forecasted, it is good for the currency, but bad for the economy. That is how inflation goes. But other data, if it comes higher than forecast, it is good for the currency, good for the economy. All right. Aside the unemployment rate. Okay. If unemployment rate comes higher than what was forecasted, it is bad for the currency, bad for the economy. All right. If it comes lower than what was forecasted, I'm talking about the labor data now, okay, especially the unemployment, okay. If it comes higher than forecast, it is bad for the currency, bad for the economy. If it comes lower than forecast, right, it is good for the currency, good for the economy. All right, it's the other way around for the inflation. All right, just do a little bit of research on that. This is not the time to talk in depth about that. So we've talked. It's been a while. We talk about our top setup. So I figured let's take a look at that. So right here, you can see the top setup, and you can see the currency that's still staying at the top. We have NZD yen, we have NZD card, we have Aussie yen, we have card yen, all of them staying at the very top. I actually made a very good buy opportunity on card yen. I was expecting for another leg lower before I look for buy opportunity on card yen. I'm going to talk about that a little today. I missed that out. It was quite painful, but it's part of the deal. Dollar yen, I'm not sure I'll be buying dollar yen for now, right? Because I'm still pretty bearish on the dollar itself, and I'm not necessarily bullish on yen. So I would actually be looking to short dollar yen. Okay, so let's pay attention to that. NZD dollar is good for buy opportunity. Swiss yen also pretty good for buy. NZD CHF, I told you I'm not in the business of buying all these currencies. I prefer to short them. US oil is now at the top, bullish. I'm already buying US oil, but I wouldn't mind adding to the position, especially when it comes to Brent. I have a plan to buy Brent this coming week, so prepare yourself for that as well. And when we take a look at the bearish setup right here, we have Pound Aussie bearish, Nasdaq bearish, Euro Aussie bearish, Pound NZD bearish, S&P 500 bearish, and Euro NZD bearish. Okay, now Euro NZD, Pound Aussie, I'm looking for a counter trend. Okay, I want to look for a short buy on them, to be honest with you. But as time goes on, we're going to see how we're going to join all this pair moving forward because they're already too low. But if you look at the daily and the weekly trend, Pound Aussie, Euro NZD, all of them are pretty bullish. So I am looking forward to take a very good position on them. But how the entry is going to be is what I am not sure yet. Okay, but let's just watch out because as a swing trader, we have to exercise more patience than a random or any type of day trader or any kind of trader out there. I'm very sure you understand what I'm saying. So moving on to the chart, I'm going to cut it quick today, so we're not going to slip in most of the pair. We're just going to break it down fast, precise, and simple. So back to dollar index itself. This is the 12-hour time frame. Let's keep things in a very simple perspective. And as you can see, I mean, there is no doubt that dollar index is quite bearish. However, if we take a look at the US economic heat map right here, it's still very much, it's the economy still looks like it looks booming, right? The economy is still booming, especially when you take a look at the growth. By the growth, I mean the GDP, the manufacturing PMI, the service PMI, and the retail sales. All of them look very good. That means the economy size is booming, right? The manufacturers are making money, the service providers are making money, even and retail sales. You can see all these the services, okay, and the GDP as well. We're talking about the domestic production, all right. We look at them and you look at the retail sales, everything looks good, right? Meaning people are really interested in the United States to buy stuff. And you know, United States, for one, they consume a lot of things. So unlike last year that we got a negative to like zero retail sales, this time around in January we got a very good retail sales. I mean 0.6 when the market was actually forecasting 0.5. So economically, the US economy is good on paper, right? Let's just be clear on that. On paper, based on the data we have right in front of us, it looks good. The inflationary data, on the other hand, is still pretty sticky, far above what the Fed is targeting. So that also is quite problematic, and we have to watch out for that. However, in my personal opinion, this is not bad. All right, this is not completely bad. All right, 2.8 PCE year on year, PPI year on year at 3.0, and CPI year on year at 2.7. That looks pretty decent in my opinion. And when you come down to what is being expected, okay, for the CPI year on year right here on Friday, you can see we're expecting a soft print on the inflationary data, okay, on the CPI. That is very good for the dollar, right? Although it is not good for the currency, but again, I explained this earlier that when we have lower inflation, it is good for the economy. By economy, I mean it is good for the stock market, but it is not completely good for the currency. And that is why you have to like gauge both of them. You have to measure it together. All right. And overall, I think a lower inflation will boost retail sales, boost manufacturing and service PMI, and the GDP also makes some sense, right? So everything still works good for the dollar. But on the chart, when it comes to the labor data, let's just finalize everything. When it comes to the labor data, it's still not looking super cool. Unemployment rate is 4.4 from 4.5, still pretty shaky in my opinion. Wage growth, it went up in January, okay, from 3.6 went up by 0.2%, quite decent, but I won't call this very good. I'm expecting something like 4% higher, then we have a good wage growth, right? But 3.8 is still pretty small. Moving on, the JOLT data, the ADP data, the one that we got this month, I'm talking about, and even the initial jobless claim that we got last week, none of them look super cool, right? Initial jobless claim went up, meaning new people, over 19,000 people filed for unemployment in the United States. We're talking about last week. We're talking about the weekly jobless claim. All right, this is terrible for the unemployment rate. And if you are the kind of person that follow or read the JOLT opening, like the actual numbers, right, you see that all the tech companies, they are laying people off. Amazon, Meta, Microsoft, there's a chunk load of people getting laid off, and AI is taking place of every single thing, right? It's not making the news yet, but it is happening slowly. All right, we've had stories like that in China. China is actually almost AI based country already. So I mean, AI is gonna make a way. People are still gonna get employed. You understand what I'm saying? But at the end of the day, the labor data in the United States, just to break everything down in a nutshell, it is not looking super cool, in my personal opinion. And we're just waiting for the latest data on unemployment rate, wage growth, and NFP this coming Wednesday. So you have to watch out for that, because that will set the tone for what we see in the next 2-3 weeks on the dollar index. But where the market sits right now, where everything stands right here, right now, I am still at large bearish on the dollar index. Okay, I have to say that I'm pretty bearish on the dollar index. And when the time is right, okay, we're gonna have to gauge how to approach dollar index moving forward. As you can see, what I'm able to spot right here, we have a little bit of a bullish channel, right? Okay, it's still in this very tight, tiny. On the 12 hour, is not very. If you take this to 1 hour time frame, it's not very tiny. But on the 12 hour, it's pretty tiny. All right, pretty small. But the channel is. I see the market losing. I mean, it's losing is steam. Okay, the buyers are losing their steam. As you can see right here, when the market is just breathing to the upside, it looks like a flag pattern, a bullish flag pattern, before the market continues to sell off again. So I think that is exactly what we are seeing right here. The market seems to be losing some steam, and potentially we can see it actually cross to the downside, pull back, and we get it all the way back to 93.30 and maybe further down to 94.65. So watch out for DXY. But where I draw the line for bears, right? I'm talking about sellers on DXY. Where I draw the line would be right at the top here at 99.00. All right. Anything that makes dollar index cross above 99.00, then we are all the way to the upside. Okay. By that time, we're going to get NFP, all the labor data will have been out, the economic growth will have been out, inflation will know what is up over there. And by that time, we're going to know what's up, right? But at the stance now, I was saying I'm leaning more bearish than bullish right now. Okay, I'm leaning more bearish than bullish right now on the extra. So this is the time you want to watch out very closely, especially if you're a forex trader and you want to plan yourself accordingly. So let's jump straight to the chart or to the trades I'm currently holding. I'm currently buying euro dollar, and I really don't see any reason why I want to close this trade for now. I'm buying it, I'm holding it, looks good for now. So let's see how it plays out. Dollar Swiss, I'm currently shorting it, it looks good, it is fresh, nothing has changed, nothing has changed. And if it is not broken, I mean, there's no point in fixing it, right? So let's leave it as it is. Solana, I closed my short on Solana last week, Friday, I believe. Yeah, it was a very beautiful trade overall, right? It was a very, very interesting trade. One of the best trade I've picked this year. I mean, one of them, because NZD, I would say NU is the best trade I've picked this year. And a bit of good. I mean, I've picked some very good trade this year. Let me just put it that way. But anyways, Solana, I'm still of this particular opinion. I'm waiting for some pullbacks. But when it now comes to my pullback on Solana, we have one here, okay, and then we have a key zone right here, okay, the one we have at the top here. So let's put the numbers to them. We have 105 and then we have 118. Okay, if Solana can find its way back to 105 to 108, okay, I will be looking to short to the downside from there. If it finds its way back, if it does a deeper pullback and it retested 118, if that gets retested, then I will be looking to short from there as well. All right, so I have 105 to 118 region for a short opportunity and 118 for a short opportunity. Anything that makes it break above 118, I'm out of shorting. I wouldn't be looking to short Solana again. I'll probably be looking for maybe a deeper rally to this place, maybe 150 again. I mean 155 again. Then maybe we figure what to do with it from there. But anything above 118, I don't think I have plan for it from there. All right, I don't have any plan for it right now. So that is that on that. And so so those are the three trades I have running right now. Okay, moving on to the trade I will be recommending for you this week. All right, we have AUDUSD right here. Let's go to the daily time frame. Yeah. I mean, it still looks very green. I have to say that. It still looks pretty surreal, right? Nothing is very clear yet. However, I am still leaning towards sell. All right. I mean, I would not mind seeing AUDUSD back at 0.566. All right. I would really love to see that, to be honest with you. However, getting into this region, there has to be some very specific patterns, okay, price action for me to take that shot, right? I don't have plan buying this pair, okay, even though it looks super cool to buy, but I've done it so many times in the past that it was mihaga, it was ridiculous profits or trade out. I'm most likely gonna get trade out if I take the buy, especially on the UDCHF. I really do not like it. But when you take a shot on Aussie swings, card swings, Kiwi swings, you make better money because the volume is always towards the downside. That is the only reason. And you might call it sentiment, but it's sentiment that seems to have worked in the past very well. And I don't have any problem sticking to that. So Aussie swings, there is a possibility short at the top here, right? But I want to see a market shift, even on the daily time frame. Okay, if I can get a very good market shift, lower low, lower high to the downside, right there, I'll be looking to short AUDCHF. However, if it's the other way and we got a better rally to the upside, I will still be looking for what? A market shift, something like this, for me to take a shot on AUDCHF, maybe on the 4-hour time frame or on the daily time frame or even any of the higher hourly time frame. I'm talking about 8 hours, 6 hours, 12 hours, and the likes like that. So that's my plan on Aussie Sweet. Now, when we come to Cadjpy, I told you I miss a very beautiful buy on Cadjpy. So let's go to the 8-hour time frame. Right here, I was buying from here. I took a very good profit at the top here on Cadjpy. And when the market dropped crazily. I'm talking about during the Bank of England, what's it called again? Bank of England rate decision, Bank of Japan rate decision, and then the pressure or the fear of intervention. That's what actually caused this massive dump. Okay, I was very close to buying from here. I was really really close. But I was like, I mean, the market could go up, come down, make a very good lower low to this particular region, and I'll be buying from there. Right? That seems like a better region to buy because ultimately I am bullish on Cadjpy. All right. However, it's fast to the upside right now. The best I can do now is to simply wait for a decent pullback. All right. I mean, a decent pullback to retesting this zone. If that's even ever going to happen, by the way. All right. This is not the idealist thing, I must say. All right. Because the market has already done what? Has already break above it, has pulled back. This place has been used as support. What I'm waiting for is probably I'm going to get, right here, it's more like a demand, also support. You know how it goes, right? So if I'm fortunate enough to get this particular place retested, yeah, maybe I will be buying from there. But anything outside of that, the other or alternative way of trading Cardin would be a break above 115 region, a pullback, then maybe I'll be buying from there to the upside. But ultimately, again, I'm very bullish on Cardin. So let's keep a close tab on that. Pound USD was also a very beautiful one. I didn't pick this one because I'm already on euro dollar. But don't forget the analysis that I shared with you earlier. I told you that we can get a retest of this region and a retest of this region. Those are the two regions that makes sense to be buying. I told you that this is A plus and this is also an A plus, right? This is a much deeper level because it's going to be acting like a key zone, right? And if you take a look at it, the market almost retesting that region at this particular level. So I didn't pick this one, but maybe when the market open on tomorrow is Monday, when the market opens successfully tomorrow and we get probably a retest of this region again, maybe I'll be taking a buy from there. Or peradventure we get another leg to the downside that form a divergence here. Oh, that would be beautiful for me to look for buy on pound USD. But right now I'm just chilling on pound dollar and I really don't have any trade right now. It's painful though, but I mean, if I wait long enough, I should be able to get a very good entry on pound dollar. So going to pound Aussie right here, pound Aussie looks like something that I wouldn't mind buying also. Okay, I mean, I have this alert here. I want to see a market shift on pound Aussie before I start looking for buy opportunity. Let's go to 12-hour time frame really quickly. So, I mean, again, we could get another leg lower right here. The divergence already there. We're seeing a very good market structure. We also have something like an ending diagonal right here. So potentially we could get what 1, 2, 3 all the way to the upside right here. I told you again, I'm only looking for a short buy. All right, that could lead to a swing buy in the future. Why am I saying a swing buy? Because on the weekly time frame, this is a very beautiful bullish trend. I mean, you cannot downplay this. This is bullish, right? We have higher high, excuse me for that. We have higher high, right? Higher low, oh, excuse me, higher low, higher high, higher low, higher high right here because it broke above here. So that's sweet. Higher low, higher high. You might be getting a deeper low, like a 1, 2, 3, 1, 1, 2, 3, right? A double zigzag pattern before we now get the market to rally back to the upside. That is what I'm forecasting on the weekly time frame on what? On pound Aussie. Okay, let's just be clear on that. But when you now take it to the 12-hour time frame or something lower, I mean, I'm not going to be trading the weekly time frame when I'm not chilling myself or kidding myself, right? So I have a plan to maybe look for if the market is not going to retest this demand zone or this one, at least I want to see 1, 2. Okay, I want to see this leg to the upside, a pullback. Then I'll be looking for buy right there. However, if the market comes down to this region, to the bottom here, yes, I'll be buying from there. My stop loss is going to be pretty wide though, right? I'm right at the bottom there. But until I get this, I look for buy, or I get a break at the top here, I will look for buy on pound or this. So a buy here or a buy here, period. Those are my trade plan on pound Aussie. So watch out. NZD dollar did not, I mean, Kiwi dollar didn't come to our area of our pocket region. I'm talking about area of interest. I mean, the 50% Fibonacci, or maybe a deeper level to like 0.618 Fibonacci for us to look for buy. So that one actually left without us. But I'm not calling it off yet. I'm not calling it over yet. But we shall see. NZD dollar, I love it. It's beautiful, but it's not the kind of pair I want to rush into. I'm definitely not going to do that to myself. So I will wait. Adventure we get another leg to the downside and the market rally, I will be looking for buy right there on NZD dollar. So take attention to that. Dollar yen, I told you earlier, I'm looking for short on dollar yen. I mean, you might call me weird, right? It's because it in fact sounds pretty weird. But yet again, I mean, come on, just look at this. All right, you just want to see that leg to the downside. All right, if dollar index ends up dropping further to that 94.65 region we discussed earlier, oh yeah, we're probably going to see something like this on dollar yen as well. All right, to like 151 region. All right, but that's a bit of stretch. That's a little bit stretchy. Okay, it's a little bit of a stretch. However, all the way to the upside, yeah, it has a lot of potential to the upside. I mean, if I'm not going to be kidding you, it has a lot of potential to the upside. But then again, right, I would love to see the pullback. Okay, back to this 151, then I will be looking to buy from there. Okay, if I get that, I'll be happy. If I don't, I would love to watch this go without any, without any pressure, and without me holding grudges. With you know, dollar yen. So that's that. Dollar card. I think dollar card is good for a good shot if you are interested. Right, dollar card is still, in my personal opinion, on the weekly band. It looks like we can get, okay, we can get another leg to 1.3089. Okay, we can in fact get another leg to this region, or to this region, or maybe lower to this particular region on the weekly band. Because I mean, this doesn't really look like a trend like that. I don't really like all this drama. All right, and we have these multiple tops right here, these three tops. So maybe drop to the downside right there, and then maybe all the way to the upside. It looks very weird. If we are not gonna be lying to ourselves, it looks like a big fat range, honestly. I mean, just take a look at this. We have what we can call support here, right? It's also been retested like 3 times. Let's make that demand. Where is it again? Demand region here. Okay, and we have what we can categorically call a supply here, or a resistance, right? If we are not trying to kid ourselves again, don't forget what I'm saying. Okay, on the weekly band, this looks like a very big fat range, right? A big fat range. Looking at it, even on the monthly band, right at the top there, it is a big fat range, right? So let's take it to 8 hour time frame. On the 8 hour band, I mean, we have we've seen the lower low, lower high, lower low, lower high, back to this particular region of 61.8 Fibonacci retracement level. I mean, we can just look for another leg to the downside. I mean, if you are following the trend. However, where I draw the line is at the top here. If I get to see dollar card break above here, yeah, maybe I'll be looking for that at the top there. But anything from this place lower, right, I'll be selling this guy all the way to the downside on dollar yen. I mean, on dollar card, excuse me. So dollar card again, just look for a 2 hour candle close. Yeah, something. Yeah, now this is beautiful, right? On the 2 hour time frame, we have this what we call a very, I mean, wedge pattern. We have a break of this wedge pattern, right? Break to the downside now is retesting the lower bound of this particular wedge pattern. That is very significant, right? It is retesting this particular trend line. So what you can expect is a close below this particular candle, and you look for short right there. Put your stop loss above there and target 1 to 1 ratio 3. Period. This is how it's going to look like for me if I'm going to be taking this, which potentially like 70 to 75% I will be taking it. All right. My stop loss is going to be at the top there. I don't have any entry yet. This is how it's going to play out, right? I'm going to extend this probably to this particular bottom here. 1 ratio 4.4. That's beautiful, right? 1 ratio 4 is fine. I'm just going to be risking maybe 200 pips, not 200 pips, 100 pips. I'll be risking 100 pips, and I'll be targeting roughly 380 pips, right? So that is almost for 400. I mean, 1 ratio 4 risk to reward ratio. That way, I mean, it looks good. Dollar card looks good, in my opinion. So that's what I'll be looking for right now. Just wait for a candle a bearish candle that engulfs this particular last bullish candle, and you can look for short opportunity on dollar card. So watch out for that. This trade will be shared in my signal group. So if you want to be part, you know what to do. Lastly, let's talk about gold, and we'll wrap it up for the day. Don't forget last week when we talk about market retesting this particular region right here, because last week when we discussed the market when the market was at the top here, and I told you I'm expecting the market to retest this region, and that's where I'll be looking for buy. Did I take that buy? No, I did not take the buy, because I don't know. I didn't really know why. I was more like, I don't know. I was expecting that particular leg to the 4,400 for me to buy. So that's on me. That is definitely on me. But maybe, okay, this never say never, right? Never say never. So maybe somewhere at the top here, the market retested this. If market retest this region, drop down, I'll look for a demand on the 1 hour time frame there. I will look for buy all the way to the upside of gold. All right. But I don't want to rush into gold. Why? Because number one, the margin is massive. Okay. The margin is what? is massive. Number two, the volatility is crazy, right? If I'm taking this short, this buy opportunity, my stop loss would have been here. We're talking about over, give or take, 2,800 pips, right? 2,800 pips stop loss. That is not something you take with levity. Although this particular move already is like over 10,000 or whatever, right? But at the same time, just have to be careful, man. Just have to be careful because now this is not the kind of trade you want to jump into. And I'm already in like a lot of positions, all right? I'm already in a lot of positions, so I'm not in a hurry to pick any trade. So that's why I didn't consider it. At the same time, I overthink it. If I'm being real with you, I overthink it. But again, I'm in a lot of positions. So lastly, let's talk about WTI and we'll wrap it up. Don't forget, I told you I'm already buying WTI, and this is where I am holding WTI right here on this particular chart. So let's use this place to talk about WTI, and that will be all. So don't forget on Edge Finder earlier, Edge Finder top setup, WTI is bullish with a score of 5 right here. Okay, that's very good. I love that very much. And we've seen the structure also. I mean, we've seen a very decisive higher high, higher low, higher high, higher low. Right. So if we get, we've seen market go up now and it's coming down. If we get the market to retest this particular region, I'll be looking for buy all the way to the upside from there. That is how I am positioned on WTI. So that is where I'll be stopping today, guys. See you in the next one. Have a nice day. Bye for now.